What's up guys, Adrian here. Welcome to another video. Today's topic is going to be the DRIP or the Dividend Reinvestment Plan. So I want to cover exactly what the DRIP is, what are the pros, what are the cons of using the DRIP, and I will also show you an account that uses the DRIP so you could actually see for yourself how it looks like from a real investing account. So this is a pretty important topic that all investors should know about and understand fully, no matter what your investing style is, and by the end of this video you will become an expert on the DRIP. So let's get to it. So the DRIP stands for Dividend Reinvestment Plan, and basically if you use the plan or enable it in your portfolio or in your investing account, any cash dividends or distributions that you get from the stocks inside your portfolio will automatically be used to buy more shares of the corresponding fund or stock. So let's say you get a monthly dividend of about $100 from stock ABC. Well, if you have the DRIP enabled, instead of getting the $100 in cash, you will get additional shares, or the broker will buy you additional shares of stock ABC. So if the current share price of stock ABC is $10 a share, well, you'll get 10 additional shares, right? 10 times 10 equals 100, as simple as that. Now, of course, this is a perfect scenario, right? What if the stock price is $15 a share instead of $10 a share? Well, in that case, you will only get 6 shares. But wait a minute, 6 shares times $15 is $90. So what happens to the leftover $10? Well, you get that in cash because most brokers do not offer fractional shares. They only offer whole shares. So you wouldn't get 6.66 shares, you would get 6, and the remainder or the leftover gets deposited as cash. So if a broker does offer fractional shares like Robinhood does in America, you would get fractional shares. You would get the 6.66, for example, and wouldn't have any leftover cash. But I'm not sure if any Canadian brokers, if there are any of them out there that offer fractional shares, but I haven't heard of any. I don't think so. I could tell you that the broker I use, TD, does not, and all the other big 6 banks, Canadian banks, don't offer fractional shares. So in short, that's what the DRIP does. It automatically reinvests your cash dividends or your cash distributions to buy more shares of that particular stock automatically. So how do you enable or disable the DRIP on your account? Well, it's pretty easy. All you need to do is contact your broker, whoever you use. You can select the DRIP for some stocks in your portfolio that you have. It's completely up to you, but normally you would enable it for the entire account. They usually call it a blanket DRIP. So everything in your account, if it gives a dividend, the DRIP will be turned on automatically. Another thing to keep in mind is that some stocks and funds are not DRIP eligible. So you really need to contact your broker to find out if they are in the first place. So don't break your head looking up this information online. Trust me, the best thing you could do to save time is really to call your broker directly, because I also know there's some situations where some brokers offer the DRIP on one stock and another broker does not offer it on the same exact stock. So the best thing to do is really to check with your broker. Call them, list all your ticker symbols, and they will tell you if there's a DRIP or not. As simple as that. So one thing I could tell you about the TD broker is they're working on a platform upgrade where you're not going to have to call anymore. It's literally going to tell you if it's DRIP eligible or not. So I can't wait for that platform upgrade. But right now, the best thing to do if you use TD like me is really to call them to find out. So before I go into the pros and the cons of the DRIP, I want to show you how a DRIP actually looks like with a real investment account. And since personally I don't use the DRIP, I will show you my mom's RRSP account, because the DRIP is enabled for the entire account. So you'll see exactly how it looks like in the transaction history. So let's check it out real quick together. All right, guys, so I'm in my mom's RRSP account. She uses CIBC Investor's Edge. So whenever you want to check out the drip actually happening, you want to see your dividends, you have to go in your activity log or your transaction history. That's where you will see the drip or the dividends as well. So if you do have the drip enabled, you will usually see 2 transactions per stock or per fund in the log. So the first one, as you could see here, we'll focus on this ETF here, the IDR ETF, which is a real estate ETF, Middle Field REIT Index Plus. So you will see that this line here, this transaction is actually for the dividend itself. And then the second transaction, you can see here, it's still the same stock symbol, is for the drip or the reinvestment. So if we focus on the dividend here, they're basically saying that this ETF, your unit distribution on 857 shares, the record date of this dividend was July 31st. The pay date was August 13th. So on 857 shares, here is the dividend per share, the distribution per share. So 7.5 cents. So basically, if you do 7.5 cents times 857, that's how many shares you have, you will get a total dividend or distribution of 64.28. So if we look at the reinvest or the actual drip, you get the same dates, but it will actually tell you the share price that it's reinvesting at for you. So right here you have it at 15.62 a share. So you're getting 4 additional shares at $15.62. So 4 times 15.62 will equal 62.48. You could see that there's a little bit of a discrepancy, but that's because this broker does not offer fractional shares. So instead of getting 4.1 shares, you're getting 4 shares, which equates to 62.48. So the difference, it's about $2, will be automatically deposited as cash. So there's leftover cash. So this goes the same for every single one of the holdings. You could see that for HGY, HHL. So you will see your actual dividend, and then you will see the reinvestment amount, the actual dividend and the reinvestment amount. That's why it's a minus, right? So whatever the difference is between the two will be automatically deposited in cash. So it's as simple as that for every single holding in the account. So there you have it, guys. Now you should understand and really see what the drip looks like in a real account. So now it's time to go over the pros and cons from turning on or using the drip. So let's start with the pros. Number 1, of course, there's no broker commission fees. So one thing that's really cool about the drip is that when your broker is buying you those additional shares automatically every month or every quarter, they don't charge you a commission like if you would be placing the order yourself and buying them yourself in the first place. So this is a big advantage if you're using a broker that does charge commission fees like TD or CIBC. So TD, Royal Bank, Bank of Nova Scotia, BMO, they all charge about $10 whenever you buy or sell shares. CIBC is the only one that charges $7, a little bit less. So whatever you use, buying more shares via a drip is commission free. Also, single stocks sometimes offer a drip discount where if you have the drip turned on, you get the shares slightly cheaper than the market price. So obviously you need to check if the stock offers this, but this is more for single companies, not for funds or ETFs. So the best thing, once again, is to really check with your broker if you have any single companies. Pro number 2, it's very hands-off, right? Set it and forget it. So another advantage is that it's completely hands-off. It's completely passive. The purchase of additional shares is done on your behalf automatically, seamless. So the only annoying part is that all those cash leftovers do accumulate in your account, and you will have to decide later on when to buy more shares with it. But besides that, it's completely hands-off. So it doesn't really make sense to reinvest a $10 cash when your commission is $10, right? That would completely make no sense. So I'll talk about this in the cons actually a little later. The third pro that I want to talk about is the compounding interest effect. So the third advantage is that enabling the drip literally turns your investing account into an automatic compounding interest machine. So think about it. If all those dividends are simply being reinvested every month or quarter to buy more shares, well, the more shares you have, the bigger your dividend and distribution gets month after month after month, right? So the longer you do this for, the bigger the compounding effect is, that's why it's so important to invest as early as possible and for as long as possible. So now let's get into the cons that the drip has. Believe it or not, it does have some cons. So number one, this is the biggest one, the most obvious one. You lose the freedom to reinvest the dividends yourself. So what do I mean by that? Well, one disadvantage that the drip has is that the choice of what you're investing in next with your dividends is taken away from you. So if you don't have the drip enabled like myself, you have the freedom to reinvest all those cash dividends into whatever you want. So if you see that in a given month a certain fund or a certain ETF or a certain sector is not doing good, it's lower, like energy and gold, for example, this month, and it has good value, you can invest all your dividends in that particular fund, right? So I'll give you an example. Let's say this month in August, the energy sector has taken a little bit of a hit because oil went down because of the resurgence of the Delta variant, or the resurgence of the fear of COVID-19, which puts pressure on, travel and all that stuff. So oil prices go down, energy stocks take a tumble. So I can take all the dividends of this month and put them in my fund that invests in energy, so I'm getting good value. So you actually have the choice and freedom to do what you want, giving you a big advantage, because if you get good value, you're getting cheap shares, which means you're getting higher yield, right? So the stock market always has its cycles, guys. There's always one or two sectors lagging or not doing great in any given time. So by not having the drip turned on, you could capitalize on that. Number two, con number two is that it takes more work and there's a commission cost when you reinvest manually. So this is obvious, right? If you don't drip, you need to decide for yourself what to reinvest those dividends in. Of course, if you're living off the dividends and don't reinvest them anyways, it doesn't matter. But doing this, if you do this, doing it yourself takes time, and you actually need to spend time deciding what to invest in next. And you need to execute the order yourself. So myself, for example, I do one or two transactions every month, so it costs $9.99 per transaction. So if you're dealing with large amounts of money, it's not a big deal. But if you're dealing with smaller amounts of money, those commission charges can be a little bit painful and add up over time. Con number three, I kind of discussed this earlier. You have that leftover cash that just sits there until you manually reinvest it. So like I showed you before, since Canadian brokers, or most of them, not that I know of anyway, they don't offer fractional shares as of now, there will always be some small leftover cash amounts once the drip goes through. So that cash balance will sit in your account doing nothing until you reinvest it. And if you have a broker that charges commission fees like TD does, it's definitely not reinvesting small cash leftovers every month, right? So you're basically stuck waiting until it accumulates, until it gets to an amount where it becomes worth it to actually do another trade. So in my opinion, my personal opinion here, the bare bone minimum would be $1,000, getting to $1,000 first. But in the end, it's really a matter of opinion. Of course, this is not an issue at all if you use a commission-free broker like Wealthsimple. So those are the pros and the cons of the drip, guys, in my opinion. Should you drip? Should you not drip? Well, it really depends on your situation. I don't feel that dripping is good or bad or wrong, right or wrong, right? You got to weigh up the pros and cons and make the decision for yourself, tailored to your situation. So for people who are income investors like myself and don't need the income right now, let's say you like the income style, but you don't need the income, well, it makes a lot of sense to use the drip. These can be people at the height of their career and simply want their investments to compound on their own automatically without thinking about it or lifting a finger, because they're 100% focused on their career and other stuff, right? So if you're someone like me, however, who lives off the income and wants to decide what to invest in next, the drip is not necessary. I like having the freedom of deciding what to invest in next so I could really maximize value. So remember, when a fund's stock price goes down or goes lower for whatever reason, the yield is higher. So you lock in a higher yield forever if you make that purchase, especially if you're a buy and hold investor like myself. So this is why I have a monthly series, guys, called Stock Picks of the Month. I show people what I feel are undervalued stocks and funds to buy in the coming months. So if you're manually draining and investing every month like I do, make sure you're subscribed to my channel so you don't miss out on those videos, which will give you a good idea of what's undervalued for that month. So either way, guys, don't forget that the drip can be turned on or off with one quick phone call to your broker anyway. So what a time to be alive, right? Investing literally has never been easier. So I hope you enjoyed the video, guys. If you learned something, please hit that like button. I would really appreciate it. It's free for you. It helps the channel grow. So it's a win-win. Make sure to check out our website, passiveincomeinvesting.ca. That's where you could purchase and access my digital product, the Ultimate Dividend Passive Income Investing Package, which is all my years of research looking into the best stocks and funds designed for income and growth. There are sample portfolios in there, and it's great for Canadians and Americans as well. So it's only $45. Make sure to check it out and pick it up if you haven't done so. It comes with lifetime updates. So in case when my next version comes out, version 3, which should be out in the next month or so, you will have access to the newest version for free. Also on my website, I do offer a one-on-one consultation service if ever you want me to ask me a million questions, look at your portfolio, help you build or transition your portfolio into income, whatever it is. I love doing it. I'll help you best I can. So I'm completely booked until October. I will let you guys know via a community post when the October slots or the October appointments are open. So stay tuned for that. Finally, guys, make sure you're subscribed so you don't miss out on my future content, on my future videos on passive income investing. It's all designed to help you on your investing journey. And finally, also make sure to check us out on social media. Follow us there. We have an Instagram. Our Facebook group keeps growing. We're at 2,700 members now. So make sure you join our little community there on Facebook if you use those social media platforms. The mission of this channel will always remain the same, guys. It's to help everyday normal working people invest on their own to build their own stream of passive income to enhance their quality of life. So with that, take care, guys. Stay safe, of course, and see you next time.